What if I told you that one simple ICT concept could help you spot A+ setups and therefore drastically boost your trading results? In today's video, I will break down the SMT Divergence, one of the most powerful ICT concepts that can be used as a layer of confidence in order to identify those A+ setups, a concept that not many traders talk about. I'll show you exactly how to identify it, why it is so effective, and how I personally use it to identify those high quality A+ setups in real market conditions. And to make it even clearer, I will also walk you through some real trade examples, trades I've taken and also shared in my community, showing you exactly how the SMT Divergence helped me determine whether it's an A+ setup or not. That being said, if you want to level up your trading and start spotting these A+ setups with ease, this is a video you don't want to miss. Alright, so first things first, what is an SMT divergence? The SMT divergence refers to a situation where two correlated markets, for example, Euro-dollar with GBP/USD or Dow Jones with Nasdaq, show conflicting price action. Meaning that, let's say, one makes a higher high while the other does not. And this divergence right here signals a potential reversal. That's why it is a very good concept and a very good added confidence to use. And now let me show you exactly what we need to look for, because like this, it will be a lot easier. So let's say this right here is the Euro-dollar chart. And we have a very clear uptrend. We have a higher high, a higher low, a higher high, a higher low, and a new higher high. Okay, this is the price action. And then this is the price action of the GBP/USD chart. Okay, let me show you. We have same thing, a higher high, a higher low, a higher high, a higher low. And here, instead of having a higher high, we have this. Okay, so let's look closely and spot the difference. We have this higher high, we have it higher low, higher low, higher high, higher high, higher low, higher low. But then check this out. Euro-dollar creates a new higher high by breaking the previous one, and GBP/USD fails to do that. Okay, this was the most recent high on GBP/USD and price fails to break it. And over here, this is exactly what an SMT divergent looks like. Okay, right here, we will draw the line and we will draw SMT on it. Let's just place this high over here a bit lower. And over here we have the SMT. And this right here is a bearish SMT example, because we can have a bullish SMT or a bearish one. This one right here signals that price could potentially see a reversal. Okay, we could potentially see something like this on both markets. Okay, that's why it is a very good concept and a very good added confidence. And once again, right here we have the SMT divergence, because on Euro-dollar, price formed a new higher high, whereas on GBP/USD, price formed a new lower high. Okay, and now let me give you a bullish SMT example as well. This time, let's use Nasdaq and US 30. Okay, so on Nasdaq, let's say we have this price action right here, a lower high, a lower low, a lower high, and then a new lower low. And then on the other hand, we have US 30 that moves like this. Okay, let me show you. We have a lower low, a lower high, a lower low, a lower high, and then price does this. Okay, so now let's spot the difference. We have a lower low, yes we do. Then we have a lower high, lower high, lower low, lower low, lower high, lower high. And then check this out. Nasdaq breaks the previous low and heads lower for a new lower low. US 30 fails to do that. It doesn't break the most recent lower low and it creates a higher low. Okay, because of this right here, we have a SMT divergence. Okay, this is the SMT divergence between Nasdaq and Dow Jones. Let me mark it on US 30 as well. This is the SMT. And now we know that from here, price could potentially have a reversal. Okay, we could expect something like this. And now real quick, I want to search for a chart example as well before going over some trade examples, trades I took using this exact confluence. And on these trades, because I found this confluence, I was able to risk a bit more and maximize my profits. I was able to capitalize on them, because don't get me wrong, there's trades that I take that don't have a SMT divergence. Once again, this is more of a added confidence for me than an actual concept that I need to have in order to take a setup. Just wanted to make this super clear. All right, so I found an example right here on the 5-minute time frame. Reason I'm on the 5-minute is because this is the time frame where I look for SMT divergence, okay? And right here, it started forming some bearish structure. Why is that? Because we have these breaks to the downside. Again, we have a new one over here, and price is constantly heading lower. Okay, it's creating new lower lows and it's pushing towards the downside. However, let me show you the US 30 chart in the exact same time. Okay, so this is NASDAQ. Now let's look at US 30. Check this out. US 30 on the other hand is forming a bullish market structure. It's continuously forming new higher highs, heading higher. Okay, and right here it is clear as day. Once again, let me show you NASDAQ, that we have an SMT divergence. So we can mark these lines here and mark them with SMT to know that we have an SMT divergence on these two markets. And because of this, we now expect an impulsive move towards the downside on both of them. Okay, and now let's play the price and see what happens next. Let's play it. Boom, check this out. This is US 30 and one sec, this is NASDAQ. Okay, check this out, clear as day. And just to show you guys, this is an example from yesterday. Okay, I didn't look back for days or weeks to find an example. This was literally from yesterday. Okay, this right here is the live market. And once again, you can see how with the help of the SMT, if you would have had a setup here, you could have definitely entered a sell. And now it's time for me to go over some trade examples as well. The first trade I'll go over is a trade I took on Eurodollar. It was a sell. Right here is exactly when I opened the chart for that specific day. And the first thing that I did on the hourly time frame is I marked my H1 liquidity levels. I identified this valid high over here that just was swept, and then this valid low over here. Okay, and then I saw that the valid high was taken out, and it also gave me a beautiful H1 sweep. Okay, why? Because we can see that this H1 candle went above the high, it liquidated it, but it failed to close above it. Therefore, we have a beautiful H1 sweep, which is a good higher time frame confluence. After that, I went on the 5-minute and I patiently waited for a market structure shift, for a bearish one, but we can see that price went higher. Because of that, I then checked the 1 hour again to see where we're at, and we can see that we no longer have a beautiful H1 sweep. Why? Because this candle fully closed above the high. However, I looked left and I was able to see that price entered this beautiful H1 supply. This beautiful H1 supply that was also visible on the 4-hour time frame. Okay, so essentially we have a H1 plus an H4 supply. So that's a very good higher time frame confluence. Okay, so the higher time frames were looking great. Now all I was waiting for was a 5-minute market structure shift. Okay, and right here is when I started looking for SMT as well, but let me spot the shift first. And one sec, I think it's over here. Yes, it's over here. So right here, I was able to identify the aggressive shift. We have a full body closure below this low. We have a fair value gap as well, exactly what I wanted. And I think we have a second VVG that formed. Let me just play one more candle. Yep. And on this one, I've entered, but let's talk about the SMT. Like I said, up here, I was looking for a SMT divergence. And how was I checking? Knowing that I'm on Eurodollar, I was checking GBP USD. Okay, so let's check GBP USD. And what we can see here on GBP USD is that price formed this higher high and then it formed a new one, where on Eurodollar, price went lower. Okay, we can see we have a very clear bearish SMT. Once again, let's check GU as well. So this right here was a very good added confluence, and therefore on Eurodollar, when I placed this setup on my accounts, I risked a bit more than usual because it was a very good looking A+ setup. From the higher time frame confluences to the 5-minute aggressive shift, we can see it was looking textbook. to then also having the SMT Divergence confluence. Because of that, I went ahead and risked more in order to capitalize on this beautiful setup. TP was at 1 to 2, and of course I've also sent this trade in my community. And on that note, if you would like to join our community as well to be able to work with me one-on-one and learn how to trade profitably, you can feel free to click the first link down below and apply for it. And now let's play the price and see how this trade played out. It triggered right there, and look at this beautiful sniper reaction. Okay, right here I remember that I closed it on one of my accounts right here because I was in another trade as well, and the total profit between the two trades was really good, and because of that I decided to close the profit and secure a payout. However, on my other accounts I took a break even on this setup because price played out and then it eventually went higher. But let's go on the 30-minute to play it faster. But what I wanted to show you guys is that it still went all the way. That's where it stopped me on the other accounts, but then price eventually smashed the final target as well. And the second trade I want to go over is on NASDAQ. And once again, these two were very good A+ setups where I risked more than usual. Once again, I'm taking setups without the SMT confluence as well. However, when I have it and when it's aligned with a very good higher time frame confluence and a very good and aggressive shift, that's what I am capitalizing on it, and I'm risking a bit more in order to maximize the profits. Okay, so right here on NASDAQ, first thing that I did in that specific day is I marked my liquidity levels on the hourly time frame. We had this liquidity level over here, this valid low, and then this newly formed valid high. Price was in between when I firstly opened the chart, and then I just waited on the 1 hour for one of these two levels to get taken out, and as we can see, the low was taken out, this one as well, and it gave us a beautiful H1 sweep. Why? Because price went below, liquidated all the early buyers, and then it closed higher. Okay, it closed above the low. Because of that, I went on the 5-minute. I was waiting for the aggressive shift, and I was also actively checking to see whether I have an SMT. And what I did on NASDAQ is I saw that I have a lower low over here and a new lower low over here. Okay. And then what I did is I checked US 30 to see how US 30 was looking compared to this price action. And on US 30, we can see that instead of a lower low, it created a higher low. From here to here, we have a lower low and a higher low instead of a lower low and a new lower low. Because of that right here, I marked that we have the SMT divergence. So once again, a very good added confluence. And therefore I was very excited to wait for the shift. Okay, I didn't enter anything yet. Okay, I'm not entering only if I see the SMT divergence. I need to wait for that shift. It is mandatory. Okay, so now let's play the price, and we can see that the shift came in right here. Okay, we have an aggressive shift, very beautiful BOS, full body closure above, exactly as I wanted. We had this small VBG over here and then the second one over here. And on the second VBG, this is exactly where I entered the markets. I placed the buy limit, the stop loss below this low, and then I targeted to RR. And then of course, this setup was sent in my community as well. And now let's play the price. And we can see that initially it missed it, and then it tapped the VBG. And I think it had a it had a beautiful reaction to it. And price went all the way and it smashed the TP right there. Okay, so once again, with the help of the SMT divergence, I was able to capitalize on this setup, risk more, and maximize my profits. And there you go, guys. This is exactly how to identify the SMT divergence, why it is important, how to apply in order to identify those A+ setups. Down below, let me know if there's any questions or unclarities. If you enjoyed the video, make sure to like and share it. Also, make sure you're subscribed to not miss out on the future uploads. Until the next one, if you guys want to see a series where I bought a 200K account and I documented everything from the challenge to the live funded account to then request the payout as well, make sure to click the first video of the series right here. And lastly, I want to wish you all the best and take care.